Welcome to the Homebuying webinar, July 15th of 2020. We are doing a sound check. We will be starting momentarily, doing final sound check for Homebuying webinar of July 15th, 2020. Thank you.
Hi everyone, welcome to Taylor Morrison's Homebuying webinar. It is right at 1/2 the hour. We know we have several people still dialing in and joining us right now, so we're going to give everyone maybe another 60 seconds to join us. I know personally, I know when I'm running 1 to 2 minutes late for a webinar and I missed the 2 first slides, I feel a little sad, so we're going to give people just 2 more seconds to hop on and then we will get going. All right, everyone, it is time. We are going to get going. We know your time is precious and we want to make the most of that. So my name is Stephanie Mccarty. I want to thank you all for spending time today with us on your Wednesday. We have a jam-packed presentation for you, and we hope that you'll find some golden nuggets along the way. A little bit about me. I am the Chief Marketing and Communications Officer here at Taylor Morrison. I have been fortunate to be at this wonderful organization for a little over 5 years, continuously learning and working alongside some very brilliant and bright people. I'm not a longtime home builder. My background really spans technology, higher education, manufacturing, and really the gamut. But I have found that construction, building dreams, building the American dream, helping families find their perfect home is certainly a passion of mine, and I'm honored to be in my role and be here with you all today. So who is Taylor Morrison? Why in this journey of purchasing a home, this lifetime commitment, this enormous purchase, why would you choose Taylor Morrison against the other competition and the many options that you have out there? Taylor Morrison is the 5th largest home builder in the nation. I like to call us, we're a hodgepodge of many smaller builder families that adds to the complexity and the dynamic elements of any family in America. So we are, we build across the country. We are in 11 states and in over 20 major markets. And we really serve customers all the way from first time, entry level, move up, all the way to, we have a very large active adult platform, and we serve our 55 plus buyers very well too. So we really do serve almost everyone and anything that you're looking for. Our products are beautiful, and again, run the gamut in size and shape to really reflect you and what you would want in your home. We've been recognized as America's most trusted home builder 5 years running. That is a third-party survey that we have no paying stakes in. We don't have any way to influence or skew the data. That data comes from folks like you who are shopping for a new home and participate in this completely free and anonymous survey. So we are honored, and we know that with that recognition comes a responsibility that we hold near and dear to deliver a quality home on time and as you had expected from the get-go, and really be your partner along this journey. We know that home buying can be very complex, and our goal today is to break it down into small steps so that you understand what you're getting into. We know that there's a number of folks who are joining us today who are embarking on this journey of purchasing a home for the first time. And our job today and our hope is to empower you and to embolden you to take that leap. I think as a brand, Taylor Morrison, we stand for progress. We want people to know that life progression is natural, but we also know how scary it is, and we want to help you run into that, fall forward into that fear versus strive away from it. It's sometimes easier to just sit in the familiarity versus go to what you know in the long run is exactly what you want. People ask us all the time, our job in the marketing and communications role is to talk to consumers, find the messages that resonate, that are familiar, that are relatable. And right now, in this crazy world we're living in, people are like, why rent? Why build? Why own? What does it mean? We think, and we have long thought, that there are many benefits of owning your own home, both from an emotional side of what that gives you and from a financial investment. So we know certainly with COVID, people are trying to figure out what their next move is. They're trying to be in the driver's seat and have some control over something when none of us are in control of much right now. We're sitting in a lot of ambiguity. Owning the home, you are in control of when, of how. You're in control of what that space looks like, what you have in that space. So from an emotional investment, there's a lot of personalization that comes with owning a home that renting may not offer you. Right now, what you're reading in the media when it comes to the housing market, so much of that is true when you talk about historical low interest rates. We have an all-in-one mortgage calculator on our website. Affordability is one of the issues that has long pressed home building and the real estate market in general. And we can't combat that one builder company at a time. But when you look at that calculator on the website and you're exploring what's a price point that you're most comfortable with, often we'll find shoppers say that all-in-one mortgage calculator that shows what it would really cost and it breaks it down to a monthly expense is oftentimes cheaper, if not completely the same as what you're spending on rent today. So that that tool online is definitely something that we want you to take advantage of as you're weighing the options of, do I stay in a rental or do I take this leap and purchase my own home? People often ask, and I think sometimes it's just, you know, resale is what's most commonly known. People forget that there is this world of new construction, that you can be the first owner in that home. You get to pick all your finishes. It is uniquely yours. So that's what we talk about when we're talking about new construction, buying a new build. You're really buying that piece of dirt. You're putting the floor plan that speaks to you and your current life stage and your needs for your family. And the best part is everyone's going through that at the same time with you. You know, in resale, you have you know, neighbors who've been maybe original owners 10, 20 years long, and then you've got this influx of new families, and there's a lot of beautiful things that come with that too. But on the new home side, you know, everyone's starting this new journey together. And so that sense of community, which is so important to Taylor Morrison, and right now with COVID and this world pandemic, when we're all sitting in our homes and we're feeling isolated, it's nice to know that you have neighbors that are in the exact same spot as you. They're beginning this journey right along with you. I will say, from a building perspective, depending on the age and the year that your home was built, certainly codes have changed since then. Energy efficiency, the bare minimum when it comes to certain appliances or fixtures has certainly changed over the years. A new home construction builder is always building with the latest and greatest quality materials and fixtures, so that's always a benefit. We know in a resale home, sometimes replacing those things can be costly. So with new home construction, you're getting that right from the get-go. All of our homes come with a warranty, so you know that if something is faulty or needs fixed, that's of no hassle to you. And I think one of the things we pride ourselves with at Taylor Morrison is this modern architecture and layout. It's very open, yet we have all these distinct spaces. We know today in this world, people are needing more space to work from home, to work out at home, to cook at home. I think in general in the world, we're seeing a lot of dissatisfaction with where people currently are living. I'm going to be the relatable working parent for you right now. I have 2 young children, 4 and 2. And I actually am sitting on the floor in a new home that I just purchased and closed on a few days ago, surrounded by boxes. So I know exactly what you're going through as you weigh these options. You try to make the best decision for your family. When the pandemic started and we were looking for homes, you know, that surge of, oh my gosh, we need to do this. And everyone was like, no, we're in the middle of a pandemic. No one's going to be buying homes. No one's going to move. That dissatisfaction and anxiousness of sitting in place, I think, sank in, and people decided that no, they are going to take that leap. And we're seeing the surge of sales across the country. And what that means from a resale perspective is that inventory is tight. There aren't as many homes available, and many homes are getting multiple offers. I know I can speak personally that I had 2 homes that I had emotionally invested in from the very beginning slip away, and that's emotionally taxing. I think something that we can offer on the new construction side is you can come and you can pick the dirt lot and start from there. There is a lot of competition, and we are selling a lot of our beautiful homes almost at the same pace as our resale environment. But there isn't this one home that's going to get away. You really have so many options within a community to start from scratch. And also, if you need to move today, we have plenty of inventory homes within our communities too that you can choose from. So I started talking about some of this a little bit in that new home trends. Something that we're also seeing our consumers tell us, the media is talking about this a lot, is that healthy space, right? Everyone, I don't want to, for lack of a better term, you know, cooties. When you go into a resale home, you don't know who's lived there. You don't know how many people have been in and out of that home. Whether it's real or perceived, new home construction offers that newness. All the appliances are new. The air filtration system is new. More of the products that we build with are non-porous. You don't have to worry about bacteria growing in places that you just wouldn't expect it. So these are some of the things that we know are important to you when you're looking for a place for you and your loved ones. As this pandemic continues to unfold, gets better, it gets worse, we know that more people are cooking at home. So they're wanting larger, more open kitchens, which is what a lot of new construction builders will provide you. Certainly Taylor Morrison has gorgeous kitchens. Home gyms and offices. We know people are moving right now because they need a home better equipped for their current situation. As a working parent, my husband and I both didn't have space for both of us to be at home with our children, and definitely needed that separation to where we could be productive working adults and also be there for our children. And excuse me, my cat just joined me too, so he has something to say. I think when we look at how people are buying homes, that has certainly changed. This journey to buying a home, there's so many more virtual options. If we go to the next slide, something that I think Taylor Morrison is offering and can offer you in this journey for you is more optionality, almost a choose your own adventure. Depending on how you feel coming in and shopping for homes, I think that more traditional experience of searching online, finding the neighborhood that you want, exploring a little bit, and then getting to a place on a website that's like, hey, call for a price. Taylor Morrison believes in transparency. We are going to give you everything we can on our website, from floor plans, site maps, pricing, options, driving directions, anything that you would need to understand. Is this community, is this neighborhood, is this home going to be ideal for me and my current needs? The virtual world we're all living in, we're certainly ahead of the pack. I think from a builder perspective, you can go and take 3D virtual tours of so many of our floor plans. You could be physically at your home, but feel like you're standing in your new home. You could take Matterport tours, that's the technology that we use, and it will walk you into every room within the house. You could design it on your own. You could drop in, here's where furniture would be. So we have those capabilities with our design center to really take you through that. If you aren't comfortable leaving your home to go do that, end to end, you could purchase this home virtually without having to step foot in a sales center or a model home. In some markets, depending on where you are, we're offering self-guided tours. So if we have a completed inventory home that you want to go see on your time, you can schedule that appointment that's convenient and works with your schedule to go by yourself. So if you're worried about being around too many people right now, or if you are tight on your work schedule, we have some flexibility for you there. Right now, we're live in a few markets in Phoenix and Arizona and in our Texas markets, but by the end of this month, if you have a few more weeks to wait, we will have self-guided tours offered in many of our markets across the country. An extension of that tool is our home reservation process. If there's an inventory home that is in process, under construction, or completed, and you don't want to miss out on that home, you've done all of your research, you've taken your virtual tours, you've walked through that house virtually, and you know it meets all of your needs, you can go ahead and reserve that home online for $0. It will hold it for 24 hours. It allows you to get your spouse there, get pre-qualified, sign a purchase agreement, again, without having to go through that emotionally taxing experience that my family went through when we had some of the homes that we were hoping to get, went and toured, and within minutes, just so many competing folks out there because, like I said, scarcity of resale inventory is so prevalent. So I really do think all the way to closing, you and Christy, who's the star of this show, is going to walk you through how you can do all of these options all virtually too, and what that mortgage process looks like, because we know that at the end of the day, finding your dream home, designing your dream home, signing on the dotted line to get that baby built is the fun and less, I think, confusing part of the process, but certainly financing and understanding all those different pieces of getting through the mortgage process is a little bit more complex, and Christy's going to really walk you through that. Let's see. A few last things that I'll hit on, and I will hand it over to her, is that if you aren't ready to make this step on your own through the virtual tools, you know, if this is your first time, we know that it can be daunting, and just know that there is a team at Taylor Morrison that is here to help you through every step of the way. First, with our internet home consultants, if you're on the web and you're like, hey, that Stephanie girl made this sound like it was going to be really easy, but I can't find something, please reach out to us. Know that we have internet home consultants. This is your online concierge team. They know everything about our communities, our homes, our floor plans. So if something isn't making sense to you while you're doing this discovery on our website, please reach out to them. Once you're ready to make that decision, you will work with a community sales manager from the beginning all the way to the end. And this is your right-hand person who's going to help you with every question, decision that you need to make along the way. If you are if you do decide to build a home from scratch on a piece of dirt, you will work with professional designers. So we have in-home designers who will help you pick your finishes, all the way from your cabinetry to your flooring, your backsplash. If you're just not sure how some of those pieces will fit together, if you're like me and you just can't see it unless it's right there in your face, they will help you think through what is your style, what really complements your needs. And again, that process can be done virtually or in person. So definitely options for what's better for you. Christy will walk you through the mortgage process and the loan consultant's role, how they'll help you with the funding of the home. And then certainly your team alongside of your sales manager in the community is going to be what we call your builder. This is a construction superintendent. These are the women and gentlemen who are going to walk you through the build process. Every step of the way. They'll take pictures, they'll help keep you excited when your house is framed, when your roof is put on, when you have drywall, and keep you really engaged along the way if you go that route. Now I'm done talking. You don't have to listen to me anymore. I'm going to turn you over to the star of the show, Christy, who has been with Taylor Morrison and in this industry for over 22 years and is really just a complete doll and one of my favorite people to work with at Taylor Morrison. So Christy, please take it away.
Thank you, Stephanie. That is so sweet of you to say all of those nice things, and it just makes me realize how much I miss our distance with you in Phoenix and me in Florida with the thunderstorms rolling in. So I appreciate that nice intro, and I want to thank everybody on the call for dialing in and joining today. And as Stephanie mentioned, I have been in the industry for over 22 years, but I have been even more blessed to be a part of Taylor Morrison for 18 and a half of those 22 years. So this is where I've called home the majority of my career, and as crazy as it sounds, being a single mom of a 4-year-old coming out of the hospitality industry, I've found mortgage financing to be a complete passion for me, and it really is centered on being part of the home buying journey with customers. And I think working alongside a home builder has really helped flourish that passion for me. And I want to echo Stephanie's opening comments and just say that we do understand that nothing is more exciting than purchasing a brand new home. And we also understand that the financing, as Stephanie mentioned, is sometimes the scariest part along the way. You know, as Stephanie mentioned, the fun of designing a home or finding a brand new home, it is so exciting. But for, 80 to 90% of our customers, there's a financing piece that comes in. And we don't have the most glamorous side of the buying process, but we also appreciate and respect that this is absolutely going to be likely your largest purchase in life. So with our focus solely on Taylor Morrison customers, we're able to speak with one voice. And as an independent mortgage banker, we can provide that one-stop shopping that's going to offer a variety of mortgage options tailored to suit your needs while we work hand in hand with you and Taylor Morrison, we understand the construction process. We understand the team that you're working with. So finding the right financing option, it really should be as important as choosing your floor plan, going to that beautiful design center and making those selections. The quality of your construction is important, and we want to be part of that love and care that's given to you during your home buying journey. So getting comfy with mortgage, that's kind of a soft way to put it, but let's be honest, Stephanie used this word, daunting, and the thought of buying a new home, as exciting as it is, the financing can feel daunting and scary. So our goal today is hopefully to provide information that isn't too overwhelming, scratches the surface of some very basic qualification guidelines, and it may help point you in the right direction to homeownership. So, you know, the time that we spend together this afternoon could spark more questions. It could give clarity that you're in a good position to start looking for a new home, or maybe you realize you aren't just ready yet, but now you're going to gain confidence that you aren't as far away from your new front door as maybe you had thought. So either way, hopefully we provide some tips and some tools to just guide you down that path. But in addition to basic loan qualification, I do want to talk a little bit about credit and qualification improvement. We have a department within Taylor Morrison Home Funding called ARROW, Able, Ready, Own. And I'm also going to introduce you to Dorothy, which is our mortgage technology platform. So feel free to jot down some questions during the call. Stephanie will provide more information on how to contact us at the end. We had over, I believe, 2,000 registrants for this call today. As much as we wanted to open it up for questions during the call, we're going to give you all an avenue at the end to be able to reach out. So please take some notes. And I will say, I guess it's just about noon on the West Coast, but if you're on your third cup of coffee or having your afternoon tea, let's just get settled in and we'll get started. So the 4 C's of mortgage qualification, and you know, if you've ever done Google research about mortgage qualification, you always will come across these 4 C's. And very early in my career working with another corporate trainer, we've always kind of used the analogy of comparing loan qualification to the 4 legs of a chair. So I just think it's a good visual we can relate to, and I always will ask the question when speaking with customers, you know, would you knowingly sit in a chair that has a broken leg? The answer is probably no. So ensuring that your loan has 4 strong legs, creating that sturdy chair, is basically mortgage underwriting 101. And these are all the 4 components that really get you to the final end of buttoning up that financing. And as a lender, we're typically lending hundreds of thousands of dollars. So it's important for us to understand the value of your property the loan is being secured against. In addition, we have to understand your ability to save funds to purchase a home. You have to have an ability to repay the loan, and we have to decide whether or not you have the strength in your credit history to pay your debts timely. So we'll talk about each of these individually to just give you a general understanding of mortgage qualification and then hopefully help you discover where you may be in that journey to homeownership. So first we'll just talk about the collateral, which is obviously the property that you're purchasing. So when you're securing financing to purchase your home, the lender is always going to require an appraisal report, which is going to provide us with the current value of that property. So an appraisal is completed by an unbiased third party. It's a licensed appraiser, so there can be no influence given by us as the lender or you as the home buyer. And we need to be sure that we're lending appropriately to the value of your home. And we also need to be sure the home is worth its purchase price. So God forbid you are ever in default on your mortgage, we as the lender can sell that home to cover those losses. And more importantly, you as the home buyer, you want to be sure you're protected from paying too much for the home that you're purchasing. So the appraiser is going to conduct deep research of the comparable sales data. They go visit the home on site. They verify size, features, condition. They'll do measurements, photos, most importantly, finding comparable properties nearby. All of that information is compiled into a report, and that provides the value of the home with a real-time, real-world selling price. Our next leg of our chair is going to be determining the cash needed for your down payment, and any closing costs completing that you need to complete that purchase. So when we talk about down payment, the loan you're applying for will typically have a maximum loan-to-value threshold. And the loan-to-value, or LTV, is a ratio that's used to determine the amount necessary that you need to put down for your down payment as equity. And that maximum loan amount is determined by your sales price or appraised value, whichever is less. So I show an example here of a home that's purchased for $300,000. That appraisal report gets completed, and the current value for that particular moment in time is $310,000. When you're borrowing the money for your loan, if a 5% minimum down payment was required, you are going to be providing 5% of the $300,000, not $310,000. And then when we look at the acceptable and unacceptable sources of that down payment, a few examples of acceptable sources would be, probably the most common, would be funds from checking, savings, money market accounts. And the only caveat to that, honestly, is that any deposits that go into those accounts, if they're not from a payroll, then likely you would be asked to paper trail and source where they came from. Many times we do see customers use investment and retirement accounts like 401k, and most of those accounts will actually allow you to borrow or withdraw funds if you're purchasing a primary residence without having to take any penalties. Another very common source of down payment is gift funds, and when you're accepting a gift for your down payment, it's essentially defined as money that's given from a family member. So a spouse, child, or other dependent, any other person related by blood, marriage, adoption, or legal guardianship, and then also gifts can be received from a fiance or a domestic partner. We do get a lot of questions about down payment assistance from the state and county, and all I'm really going to say to that today is the best research you can do is look within that municipality of where you're looking to purchase to see what available funds and programs may be available where you're looking to buy. We have a lot of customers that purchase with Taylor Morrison that want to save funds for closing, and we can actually allow a budget worksheet to be done that shows your ability to save those funds during home construction, and that helps with your mortgage approval. So a lot of times somebody will go into one of our communities and really be ready and willing to buy, but they're just not able yet. Maybe they need to save a little bit of money. So the choice is made, rather than buying an inventory home, to buy new construction and save those funds to get them to the closing when construction's complete. And it gives an opportunity to save the down payment, but you can go ahead and lock in today's home prices, which is really awesome. And if you're somebody that has a home that you own, a departing residence, and you plan to sell that home and use that equity for down payment, you can use those proceeds from the sale towards that down payment. If we have folks that have pieces of land that they're going to sell. The one item I will say that gets a little tricky, sometimes we'll have folks that want to sell personal items. It can be used, but it gets a little bit difficult because it's very hard to track down bills of sale and a bunch of detailed documentation. So the ones mentioned here are probably most common. And then I'll just touch quickly on what's unacceptable sources of down payment. Cash in a safe, safety deposit box, sometimes we call it mattress money, is not acceptable because we really don't have a way to source those funds. And then also any type of credit cards or cash advances from a credit card is not acceptable because technically those are considered unsecured or borrowed funds. And borrowed funds cannot be used for down payment to secure financing. So moving on beyond your down payment, there are going to be costs that are associated when you buy a home. And those settlement costs can vary depending on the market. So there's really no rule of thumb to calculate those costs. Each market will have different government fees and transfer taxes. You're going to have lender fees, title fees, You're going to have to pay your first year of homeowners insurance at closing, and most customers will set up an escrow account for their real estate taxes and that homeowners insurance to be included as part of their monthly payment, so those items can be paid annually by the loan servicer. So if you purchase, and lastly, if you purchase where there's a homeowners association, which most of our communities do have, there's potentially startup fees and costs related to the community when you get to closing as well. But here's the good news. There's interested parties that are part of your transaction, and that could be your seller, maybe Taylor Morrison. It could be your lender, maybe Taylor Morrison Home Funding, and potentially a real estate agent that you've been working with. And although they cannot contribute towards your down payment, they could choose to assist with some of the costs that are associated with the financing. So for example, if a real estate agent decides that they want to contribute a portion of their commissions, or we as your lender may provide you a credit at closing, and then most times you will find that sellers provide some sort of contribution to your financing costs as well. And Taylor Morrison is a great example of that. They do provide a contribution towards financing costs as an incentive when you choose Taylor Morrison Home Funding for your mortgage. Stephanie will talk a little bit more about that as we wrap up today's call. And the only addition I'll have to that is there is a maximum limitation of what those interested parties can contribute as a percentage of your sales price. But we really find that most loan programs have those maximum limitations that could pretty much cap out that would cover the majority or all of those settlement costs that I mentioned a few minutes ago. Next slide, please. Thanks, Lance. And then our third leg of our chair that we want to talk about is employment and income. And that's your capacity, and that refers to your ability to repay your mortgage. We look at job stability and the likelihood of your income continuing. So it's important to note that your mortgage approval is always going to be based on gross income, and your gross income is your income before federal and state taxes are taken out versus your net take-home pay, which is what you get deposited into your account. That's not what we use. So we're using the higher of those two. And we'll talk in a little bit about monthly income and debt and how you can understand the maximum spend monthly against that income that we use for qualification. But when we talk about job stability, typically you're going to want to be able to show a 2-year job history in the same line of work, not necessarily the same employer. And exceptions to that would be, for example, if you're a recent graduate and you're entering your career, you could provide college transcripts and show that you're working in that line of work for your degree. If you've had a gap of employment due to a hardship, or like many families do, one spouse takes time off for family or personal reasons, and then they're ready to re-enter the workforce, that can be considered for qualification as well. And self-employment, or being a contract worker receiving 1099 annual income, typically you're going to find that a 2-year history is required, and required by using tax returns to validate that income. If you receive income in the form of commissions, bonus, overtime, or maybe a second part-time job, that also can be used, but typically has that same 2-year history of receipt as well. Social Security and pension is very common for retired borrowers. If you have distributions from your investment account that you receive monthly, that is considered acceptable income, provided that your assets are enough to generate that stream for the next 3 years. And then lastly, if you choose to use alimony or child support as a source of income, by providing a divorce decree with 3 years of continued payments expected, along with 6 months of receipt, that is absolutely okay as well. So with all of that and my water bottle sitting in front of me, I'm going to pause. I feel like we've built 3 legs of our chair, 3 of our 4 legs. I'm sitting on a bar stool right now. I'm going to hand it over back to Stephanie. You know, with us just talking about collateral, capacity, and cash, Stephanie, this is a great time to turn it back over to you, and maybe you can share some of the tools that are in the industry that are helpful for those that may have a home to sell.
Yeah, absolutely. Thank you, Christy. So I think when we spoke earlier about all the options and the flexibility in buying a home, and that's our forte. I think a lot of folks who are in the process, and I wish I could see all of you with us today and do like, hey, by raise of hand, how many of you have a home that you're currently in that you own that you would also need to sell contingent so that you could purchase a new home. I know if you're currently renting, this certainly wouldn't apply to you, but if you are in a home that you own, know that you have just as many options to sell your current home while you're looking at a beautiful Taylor Morrison home to buy. If you don't want to go through the process of obtaining a realtor and having that brokers support you along the way, because you certainly don't need to do that in order to buy a new home through Taylor Morrison. We can represent you and be part of that process with you. But on the other side, if you do fall into the category of having a home that you would like to sell without having to put it on the MLS or the open market and have multiple showings, having people coming in and out of your home, having to keep it spick and span all the time, which is a lot of hard work, especially if you're working and you have children. There are what we call as iBuyers out there in the market. Some of them on the screen are listed here. There are several players. I think the most commonly known and more currently recognized would be Zillow. And we are a huge partner of Zillow and support a lot of their efforts in this area. They have Zillow offers. There's OfferPad. There's also Open Door, which is also a huge player in this space, where you can submit a request online for them to put an offer on your home. You don't have to worry about showings. You don't have to worry about people coming in and out of your home. No repairs to manage. It's really simple. And then you can work with them directly. And most of the time, if we have a partnership, as we do with Zillow, OfferPad, and Open Door, there's some sort of reduction in fee, and they make it pretty simple for you. And they will give you an offer typically within 24 to 48 hours. So you know what they would be willing to pay you for your home so that you could move into your new Taylor Morrison home. So hopefully, Christy, that gave you enough of a break to get a drink and get more comfortable on that bar stool to take us through.
Thank you. Yes, thank you so much. We're going to spend a little bit more time on credit because it just seems to be the topic that we get the most questions on. But when we look at credit scores, it's important to know that for a mortgage, we generate a score with all three of the major credit repositories. So that would be Equifax, TransUnion, and Experian. And a lot of times it's thought that you need to have a 700 plus credit score to even qualify for a loan, but that really is not necessarily true. There's loan programs that actually allow the minimum credit scores to go down to 580. But unfortunately, lower credit scores will typically indicate that there's been late payments or some derogatory events that could prevent that qualification until the scores are raised. And there's been some time that has passed that show improvement of homebuyers' debt management. But the other big thing that credit scores can impact is your interest rate and potentially mortgage insurance premiums on certain types of financing. So we'll talk a little bit more about credit and ways to enhance your score. So Lance, next slide, thank you. I really like this slide because I think it gives a really good visual on what factors comprise your credit score. So as you can see, over on the left side, 65% of a credit score is solely based on timely payments and how much you owe against how much available credit you have. So the length of credit use, new credit, and the mix of credit types, such as student and auto loans, revolving debt, and mortgages, those will also contribute to scoring. And then note that most creditors do not report a late payment to the credit bureaus until a loan is 30 days past due. So although you may have received late fees, typically 30 plus days is when it's going to really have significant impact. So although you may still have a score high enough for qualifying, you could disqualify yourself until 12 to 24 months have passed without any late payments at all. So bottom line, it's never a good idea to gamble a late payment to a creditor because it really is impactful. But almost as important as those timely payments, you really need to manage your credit card balances against the limit. And lenders are always looking at your ability to manage the debt that's given to you. So as a general rule of thumb, you really should try to maintain credit card balance debt to not exceed 30% of the limit. So an example would be if you have a $1,000 limit on a credit card, it would be a great idea to not exceed more than $300 for a balance, even if you pay it off monthly. So I'm going to give a quick personal example. I've actually been helping a family member recently who was wanting to purchase but knew that he needed to get his credit scores up to get him in that good place, to get a good interest rate, and just get to that qualifying benchmark. So he was on his own looking at his total credit card balances to pay down rather than looking at the individual credit cards themselves. So he had, let's say, 8 credit cards, and he paid off a bunch of the smaller balance cards to zero, and he left a couple of the higher balance cards still carrying over 80% of the owed limit. So he's thinking that his total overall balances to overall credit limits would get him the score improvement, and he did get some slight improvement, but with those funds that he had to pay those cards down, he actually could have had more bang for the buck had he paid each and every one of them down to that 30% of limit versus paying a bunch down to zero. So that's just kind of one example of a credit tip when managing revolving debt. But when we move over to some credit basics, we get a lot of questions when we have consumers come in that are looking for a home, and maybe they've talked to another lender, but they want to talk to Taylor Morrison Home Funding also, but they're really nervous about credit inquiries. And so it's important to understand the difference, first of all, between a soft inquiry and a hard inquiry. And there's a lot of myths about those. But it's important to note that a soft credit pull will not impact your credit score. And examples of that would be when you get offers for pre-approved credit cards in the mail, when you do your own consumer check with the bureaus, or if there's an employer that has to do employment verification. Those are not hard inquiries on your credit. So hard inquiry happens when you apply for a credit card on your own, you get an auto loan, or you need student loans. Obviously, a mortgage loan and personal loans would be a hard pull. And then some utility companies or rental applications, if you were working with a property manager, those would be hard inquiries. And those inquiries will remain on credit for 2 years. They can cause some small incremental decreases in your overall score. But it's important to keep in mind that when you're shopping for big loans like mortgages or auto loans, you typically will not get incremental dings as long as you're doing that shopping around within a 14 to 45-day time frame from that initial inquiry. So when you pre-apply for a loan with us, when you're pre-applying, we only do a soft pull. And I mentioned earlier that for a full approval on a loan, we want to see all 3 scores. But when you're just getting started, we're just going to pull 2. And so there's no inquiry that hits your credit. But once you make that decision to purchase and move forward with a formal loan decision, then obviously we would need to do that 3rd credit score pull. So there's a lot of information on the screen, so I'm just kind of going to run through it a little slower. But we also hear a lot, well, I just pulled my credit with Equifax and it said I had a 690. Why are you telling me it's a 660? So it's important to understand that a mortgage credit report versus a consumer credit report is different. And there's a specific scoring model that we use with mortgages, and it's called a residential mortgage credit report. And when we're looking at qualifying, we're looking at the middle score, the median score. So for example, if you had a 670, a 700, and a 690, we are going to base the loan qualifications on a 690 score. If you have more than one borrower, which is so common, you know, there'll be a spouse joining on the mortgage, each individual has 3 scores. And the lower of those 2 middle scores is what is basing the loan qualification. So it's not unusual for one spouse to potentially remove themselves from the mortgage provided the loan can be qualified with one borrower's financial picture, and it gives an overall better financial loan at the end, whether that be a better interest rate or lower mortgage insurance premiums. So that's pretty common. We already talked about the need to try and maintain balances at 30% of the limit for revolving debt, but it's really important for me to mention that when you close accounts that are in good standing, it really could hurt your score. So if you have a good payment history, it may not be a great idea to just close those accounts out. And then mentioning derogatory information, it does stay on your credit report for 7 years, but as those accounts start to age, you will start to see improvement in score, provided that you maintain regular timely payments. I do want to mention your income and any bank balances have zero impact on your credit score. It doesn't even show up on your credit report. We talked earlier that obviously those are going to be main factors in your loan approval, and they'll typically indicate a strong payment history, but not appear on credit whatsoever. Collections are another very tricky thing. There's a lot of myths on how to handle those. Medical collections, which are very common, typically don't have to be paid to receive mortgage approval, but they could negatively impact your scoring. So when you have an age collection, paying that off can be detrimental, because when you bring an old age collection account to zero, it almost can resurface that account as current and then drop your credit score. So paying collections is a long-term enhancement, but likely not what will get you that immediate improvement. And then lastly, I'll just mention public records. Those do stay on your credit for 10 years. If you have any outstanding liens, those would be required to be paid for your mortgage closing or to provide a repayment agreement with that creditor. And it is not recommended to leave any accounts in dispute. There are a lot of credit repair companies out there that will tell you, or you'll go online and read, how do I fix my credit? When you start disputing accounts, when Capital One, for example, shows disputed account, the scoring model will pull Capital One out of the scoring model because it's disputed. So we could get a false enhanced credit score. So when you're applying for mortgages, you would be asked to remove any of your accounts out of dispute. And it could be something that you disputed a year ago and forgot you did, but it would want to be removed. So that's something that we would guide you on also. So, in summary, building good credit, you need to borrow what's affordable, don't overuse your credit, pay your credit cards in full monthly, and really important is don't borrow too high against the limit, and be real cautious when you open new accounts. So a lot of it sounds like common sense, and it might be real easy to manage, but it is a lot to understand, a lot to juggle, and it's very, very overwhelming. So with that being said, I just want to quickly introduce you to the Aero department, Able Ready Owned, that I mentioned earlier, and how they can provide information to you to help navigate this journey to enhancing your credit and potentially owning a new home. So Taylor Morrison Home Funding's Aero department is designated solely for qualification improvement and loan enhancement. It is not credit repair, but we offer a personalized strategy that can help enhance your credit, provide you guidance and education that gets you on the right path. And Aero is not just for those that need credit score improvement to gain loan qualification, but probably 50 or 60% of our Aero customers are also enhancing credit during home construction to get that lower interest rate or reduce their mortgage insurance premium. And I think what's most exciting is this is a complimentary service for anyone that's looking to purchase, as well as customers that are already under contract buying a Taylor Morrison home. There is no obligation to purchase a home. And again, it is complimentary. So if you're just in the beginning stages and you just kind of want to get a pulse on where you're at, we can absolutely help you do that without the obligation to feel that you need to move forward with a purchase or a cost that's associated with it. So we just want to work to tailor that path that's specific to your needs. So when you enroll in Arrow, we do run a credit simulation, and we do have to do a tri-merge hard inquiry credit report, but we'll be able to provide you with a personalized path based on your needs. And I mentioned that this is not a classic credit repair department, so we're not going to speak directly with your creditors, and it does require your participation in order for us to get you to graduate out of that program. And some examples up here on the screen of recommendations may be suggestions to open new accounts, remove any authorized users, pay off accounts, reduce balances on existing accounts. And the Arrow consultants are familiar with your financial profile, so they're going to work hand in hand with your loan officer to ensure that they're not making recommendations to spend all of your money that would then hinder your ability to purchase your home. So we work together with them, but what's kind of neat is the Arrow consultants, we have a team of 3 or 4 that work nationwide, and all they do and have since 2011 is work directly on these types of credit enhancements. And usually they'll give you a time frame, but our average time frame is usually 30 to 45 days to get some credit enhancement. And we also have something called a rapid rescore process, which they can assist you with removing those disputes that I mentioned. If you have incorrect payments or collection accounts, we can work with a rapid rescore process that you don't have to wait 60 days for the creditor to report it, and we cover that cost to be able to do that with you. So I'm going to pause on credit and just a couple of just basic, Lance, you can hit the next slide, hon, thank you so much. The next thing is just a quick overview on the main loan types, because there's a lot, and there's a lot of options out there. And, you know, if you're reading the news right now, and Stephanie kind of touched on it earlier, interest rates are at historic lows. And I've been in this business a long time. I didn't think they could get lower than they were 10 years ago. And we are seeing interest rates where they were a year ago hovering around 4%. We're now very easily underneath 3% on many different loan programs. And the buying power that that provides you is awesome. And it's important to understand the different loan types and some of the myths surrounding them. But the most common is a conventional loan, and it's a non-government loan. It's the most common mortgage product, the classic down payment of 20%. However, the agencies do allow as little as 5% down, and then they even have some first-time homebuyer programs that reduce that down payment to as little as 3% down. And then there's 3 very common government agency loan products: USDA, VA, and FHA. And USDA loans, those are going to be eligible in just select rural areas around the country, and they're wonderful for customers that have little or no down payment. It is a 0% down loan. The caveat to that is that there are going to be area median income limits. So, you know, you can't make too much in order to qualify for a USDA loan, and they do have some pretty strict debt-to-income ratio requirements when you compare it to VA and FHA. Now, a VA loan is the Veterans Administration loan, and it's an excellent product for active duty or veteran military service members. And again, little or no down payment required, typically 0. There is flexibility with your higher debt-to-income requirements and a lower minimum credit score compared to some of the conventional loans. And then lastly, the FHA loan. And the FHA loan requires a 3.5% down payment. And there is a common myth that you have to be a first-time home buyer, and that is absolutely not true. There are loan amount restrictions based on the counties, so certain counties will limit the amount you can borrow. So maybe that myth stems from, you know, it's a lower price point, but a lot of the counties around the country, you know, have $300,000, $400,000, $500,000 FHA loan limits. California goes way up there. But there is a lot of flexibility with debt ratios, lower minimum credit score requirements that really kind of mirror up with a VA loan, but obviously you don't have to be a veteran. So it's a great alternative if you can't qualify for USDA because the home's not in that rural area, or you exceed the income limits or debt ratio requirements. The other nice thing about FHA is that gift funds from a family member are acceptable for the full amount of that 3.5% down payment. And I've talked about debt ratio a couple times, and it's just that, you know, annoying math formula. But just to kind of break it down really quick, because this is really explaining how much can you afford. And your debt ratio is going to compare how much you owe each month to how much you earn. So when you look at that calculation, remember that we're not looking at your net take-home pay. We're looking at that pre-tax gross income. So we want to be sure that after you pay your new mortgage and your credit obligations, that you have money left over to pay for all of those other expenses, which includes your federal and state income tax, your basic needs like food, clothing, childcare, your home utilities. And so a solid rule of thumb is to not have your housing, your new housing and your credit expenses be above 40% of your gross income. And that should leave plenty of money left over for all of those other obligations that I mentioned. Now, there are loan programs, like I said, with FHA and VA that allow you to go above 50% of your income to be considered, but you typically want to make sure there's compensating factors, which would include having a good credit history, maybe some cash reserves in the bank for the rainy day. But the very simple formula to calculate your own debt ratio, only consider your new housing payment and credit expenses. The housing payment would absolutely include principal and interest. Stephanie just mentioned that awesome tool on the website, which will help you with that P&I part of the payment. But you also have to consider the real estate taxes, any mortgage insurance, if there was any, monthly homeowners insurance, and if there's a homeowners association in that community. Those components make up your housing payment. Then on your credit report, the minimum monthly payments. Maybe you pay $300 on a credit card, but they only require you to pay $25. $25 is what you're using. And this is where Taylor Morrison Home Funding can come in and help you with these calculations by looking through that soft credit pool, talking to you about your income. And it's really easy. It's the little number divided by the big number. And that's how we come up with this example that's on the slide of that 37% debt ratio. So I think I've killed you guys with information on mortgage at this point, and it's info overload, and we're coming to the top of the hour. So I just really quick want to introduce you guys to Dorothy. And she, as I mentioned, is our technology platform. She is a state-of-the-art secure mortgage technology that works alongside with us at Taylor Morrison Home Funding and brings you the absolute best home financing experience, where we can couple that technology and give you that personal touch service. So you'll always have a loan consultant that you can talk to, consult with, but we offer that very secure mortgage technology that you can, use anytime, anywhere, secure document transfers, real-time loan information, and that is also on our website that you can link up through taylormorrison.com. So, to just kind of wrap up on the financing piece, whether you want to pre-apply or you're considering our Aero services or you just want to talk to a mortgage professional, you can get started by going to taylormorrison.com/home-financing. And there is a link, Lance, if you'll click the slide, there is a link at the top if you want to get in touch and speak directly with a mortgage professional. If you're someone that is seeking that Aero counseling we talked about, you will always start by talking to one of our professional loan consultants who will help you run that credit simulator and then get you connected with an Aero consultant to get you on that right path. And then if you want to pre-apply, as shown on this slide, to start your journey tab at the top of the page, you would select your area of interest, and you'll be prompted through some customer-friendly finance questions. And once you submit that request, we have a local team of loan consultants. So for example, if you're in Austin, Texas, we have a team of loan consultants that will all receive that request so we can get to you and be in touch with you as quickly as possible. And I just want to remind you that is a soft credit inquiry when you do that initial pre-application. and only when you're working with Arrow would we have to do that hard inquiry. So if you have general questions and you just want to talk to somebody before going through anything in the technology, there's at the bottom of this page to request to speak to a local loan consultant. We have a distribution email that will go again to that same team, and you should hear from someone honestly within just a few business hours. So you guys, I am so grateful for everyone who joined today. I am going to turn this back over to Stephanie to close our session, and really hope to see some good questions that follows up from our time today. So thank you so much. Stephanie, back to you.
Thank you, Christy. And for those of you, Dorothy is our version of Rocket Mortgage. I know that name, that brand awareness is probably a little bit more resonates. Dorothy is our version of Rocket, and she's amazing. So we have a lot of different technology resources that help our consumers along the way, and they all have wonderful female names. We also have on our website our chatbot. Her name is Olivia, and if you have any questions, she's there 24 hours a day too. So like I said at the beginning, plenty of resources to help you take this long journey and these processes into bite-sized chunks, because our goal today was not to overwhelm you, but to give you the knowledge that will empower you to make these decisions that you need to for you and your loved ones. The home buying journey we affectionately call Homeward Bound, and it's broken up into, we like to boil them down into like 6 different steps that within those have a few steps. But once you find the home of your dreams and you are under contract, you will go from contract signing to your design studio, and you will design all of the finishes in your home. This is where you get to personalize the kitchen of your dream, the bathrooms of your dreams, the flooring that will make you, just goo for. I mean, I personally just got the flooring that I've always dreamed about. So I'm staring at it now, and I know how I'm just so much happier knowing I have what I've been waiting, over a decade to have. You get to go through those emotions yourself. From there, we go into a pre-construction meeting with your builder, pre-drywall meeting. You will be engaged and involved every step of the way. Right before your home is closing and you've been working with your loan consultant all the way through, we will provide you a new home demonstration. You'll walk into your home with your sales associate, with your builder. We'll show you how to use your new appliances. We'll show you where the air filtration system is, and we'll walk you through that entire process. And then at Taylor Morrison, when we hand over the keys, that is not where our journey ends. That's not where our relationship ends. It's really where it all, most of the times, will really begin. We will follow up with you 14 days later. We'll follow up with you a month later. We'll be talking to you at various points within that first 1 to 2 years after your move-in date to make sure that everything around your home, you're satisfied, you're living, it lives the way you hoped it would, any questions you have on any of the functionality of your home. And then hopefully, you'll refer your friends and family to us as well. And maybe they'll want to live in your community so you can all be close by. So that is our journey. That is what it's like homeward bound with Taylor Morrison. We're so honored that you spent an hour of your day with us. We hope, even though it was chock full of information, that you walked away learning something new today, feeling more empowered to make this decision. We are available. You can email any of your questions to info @taylormorrison.com. You can personally email me at smccarty, MCCARTY @taylormorrison.com, and I'd be happy to answer any of your questions. As a gift for joining us today, if you purchase a Taylor Morrison home between July 15th and August 15th, we're going to give you an extra $500 towards your closing costs. And this is on top of any promotions or offers that are currently going on within the market that you're choosing to live. So please know that that is our gift to you for educating yourself, for empowering yourself to make this big life decision. And we will be sending that waiver, that coupon for $500, and a copy and recording of this presentation, so that if you thought you captured it all, but there was one piece that you missed, you will have all of this at your fingertips to reference. And if you call us, we'll know what you're speaking about. But we are here for you along this journey, and we're so proud that you took this opportunity to learn more and spend time with us. So again, my cat Luther says goodbye, and I will say goodbye. And thank you so much for spending time with Taylor Morrison.
Thank you, everyone. Bye.